Not everything is a tax loophole, and the reason why rich people don't pay taxes is not because of some trick. There's a big difference between a tax strategy and a tax loophole. Let me give you an example. See, in the early 2000s, a couple big corporations figured out that there was a problem between the ways that foreign countries were taxed. In the US, you get taxed on your global income. If you are a US corporation, no matter where you're on the world, you get taxed. And in a certain foreign country, the rule was it didn't matter where your corporation was, it matters where you made the income. So these corporations figured out that they could set up the corporation in a foreign country and then make the income here in America. That is a loophole. They're taking advantage between the differences in two different countries' tax systems. This loophole is now closed, and I would agree that that's unethical and unfair. But this isn't why rich people avoid taxes. They use tax strategy. And what's an example of that? Well, a really common one is that you're allowed to deduct the cost of investing into your business. Anytime you buy a tractor or a piece of equipment, you're allowed to write off the entire thing. I think most people would agree that that's fair. Well, what wealthy people will do is they'll put, say, 20% down on a real estate property, and they get to write off the entire purchase price of that real estate property over 27 years. But they can get a huge deduction in years 1 and 2 by writing off all the stuff within the house. And because they use debt to finance the whole deal, they don't have to put that much money in, but they get a huge tax benefit back, therefore offsetting their other income if certain precautions apply. There's a lot of nuance with this, but the point of the story is that all of the things that you want the government to shut down, they can't, because it just encourages business activity. If you want to learn to do this, click the link in my bio and book a meeting with me today.